It sounds quite enticing to replace your active earnings with dividends in order to increase your passive income. The most passive form of income is most possibly dividends. But there is some work involved in all passive revenue streams. There's no such thing as doing nothing and getting paid continuously. That is merely nonsense. Even with dividend income, you still need to put together a portfolio of stocks or funds that will produce an income that is high enough to meet your demands. You must put in some effort and have the money on hand to establish such a portfolio. Additionally, once you reach your goal, you'll probably need to keep up with this portfolio and check in on it occasionally to make sure it's performing as intended. But this is a tiny hassle to trade for the reward of retiring early. What is the best course of action to follow if you intend to retire using dividends and you want to do this as immediately as possible? Fortunately though, in this video, I'll walk you through the fastest way to live off of dividend income. But before we proceed to that, make sure to subscribe and hit the notification bell so you'll be updated whenever we upload new videos like this. With that said, let's get right into it. Whichever path you choose to travel is ultimately up to you, because you will have to endure the market turmoil and be content with the outcome. You need to be confident with your investing approach. And I'd like to offer a different approach to high-yield dividend stocks and funds that can enable you to receive dividend income in retirement even more quickly. So let's explore it in this fashion. You begin by determining the amount of dividend income you need or want to have in retirement. This amount will differ for each person, and depending on your circumstances, it might change in the future. Let's choose a manageable quantity to work with, such as $50,000 a year, which is slightly more than $4,000 each month. You can consider your own number while still doing my calculations. Alright, so our objective dividend income goal is $50,000 per year. Finding out how much capital is needed to generate this level of dividend income is the next stage. Simply dividing the required dividend amount by the dividend yield of the stock, fund, or portfolio of securities we want to invest in will produce the answer. So for instance, Johnson & Johnson currently offers a dividend yield of 2.47%. Therefore, to earn $50,000 in annual income at the current dividend rate, we would need to invest a little more than $2 million in the stock. The current dividend yield for realty income, one of the well-known rates, is 4.3%. With realty income, we will only need to invest approximately $1.141 million, which is less than half of what J&J requires. A BDC, Ares Capital, currently yields 7.53%. We can expect to receive $50,000 in dividends from this BDC after investing about $664,000. And last but not least, we have QYLD, a covered call ETF that offers a very alluring 11.58% dividend return. To reach our target, QYLD will need to invest around $432,000. In comparison to realty income, it is less than half as much as Johnson & Johnson and $230,000 a little under Ares Capital. In comparison to lower yielding assets, QYLD appears to be a no-brainer choice based on the amount of money you would need to invest to earn the same level of dividend income. However, the issue hasn't been totally resolved for me yet. Yes, we have found that lower capital is needed for better dividend yields to produce enough income for retirement. Yet, this only works if you already have the funds necessary. Consequently, if you have $432,000, you can purchase shares in QYLD and take advantage of the $50,000 in annual dividend income. I have a tendency to assume that the majority of regular investors who want to retire on dividends don't now have this much saved up. Additionally, you can be just starting out and have no money invested. If so, you still have a math problem to solve and must take a vital step. The issue now is how to save or generate the required amount of capital as quickly as possible to achieve this aim. In order to reach the required amount of capital to earn $50,000 in dividend income, you would have needed to make multiple contributions totaling exactly how much I just described for each of the 4 investment products. This portfolio will consist of about 432,000 shares of QYLD, 664,000 shares with Ares Capital, 1.1 million shares with Realty Income, and 2 million shares with Johnson & Johnson. Due to QYLD's shorter history than the other 3 investments, I'll start my research in January of 2014. The 8-year window we would have if we were to meet our goals by January 2020 would be a tad aggressive. To reach a market value of $432,000, which would generate $50,000 in dividend income based on QYLD's current dividend yield, you would need to make a monthly investment of $100 into QYLD, totaling $2,960 when reinvesting all dividends along the way. An 8-year timeline is fairly aggressive, especially if you're starting from nothing. But as I stated, it's a hefty ask to pay over $3,000 every month. Starting with $100, you will need to invest $3,235 a month with Ares Capital, while also reinvesting all dividends to reach a market value of around $664,000. Accordingly, QYLD costs roughly $300 more each month than that. QYLD appears to be the clear frontrunner of these 4 investment products once more. However, there is also this to consider: the rates of return on investment that these products provide. In our example, QYLD had an 8-year period with a money-weighted rate of return of 8.53%. This is the rate of growth of your capital throughout this period, excluding the effect of taxes. The rates of return for Johnson & Johnson were 10.89%, 10.34% for Realty Income, and 17.06% for Ares Capital. With a $100 investment in Realty Income, it would take $7,285 a month to amass a $1.14 million portfolio. That is more than twice what QYLD requested in contributions. Finally, Johnson & Johnson would need $2 million in funding to produce the dividend income we are looking for. To reach this goal, you would need to make a monthly contribution of $12,500 starting at $100. That's more than 4 times what QYLD distributed. Let's calculate the amount of capital that Ares Capital, Realty Income, and Johnson & Johnson would generate with the $2,960 that we provide to QYLD each month. You would have roughly $608,000 with Ares Capital, about $464,000 with Realty Income, and roughly $474,000 with Johnson & Johnson. Therefore, with each of these investments, you might accumulate the necessary capital to earn $50,000 with it more quickly than you could with QYLD. Or you could accumulate more money after the whole 8 years, which would result in a higher dividend income from QYLD. Before we continue, we would love to see your suggestions in the comment section about particular topics you want us to talk about in the future. Done? Let's get going! Even after making adjustments for capital gains taxes, short-term on the 8th contribution year and long-term on the first 7, Ares Capital would still leave you with $552,000 in post-tax capital. Johnson & Johnson would end up leaving you with $439,000, and Realty Income would arrive with $430,000, just slightly ahead of QYLD. Due to the larger dividend income along the road and the adverse tax positions for QYLD's payouts, you would have been better off with these 3 investments than with QYLD, even after accounting for taxes. This is absolutely the case if we calculate the drag from these factors. The objective is to build up enough capital to provide the appropriate annual dividend income if you wish to retire with dividend income as soon as possible. The goal is to identify the product that will increase your capital the quickest while posing a level of risk you can tolerate. In the stock market, there are no assurances. Furthermore, just because a certain company or fund produced outstanding results in the past does not imply that such profits will persist going forward. Growth stocks have historically outperformed QYLD by a significant margin, and we can certainly anticipate that they will do so moving forward as well, especially when you think about investing over a long period of time. Here are 3 additional well-liked products that you may have purchased throughout the previous 8 years in place of QYLD to increase your capital. The Invesco fund, called QQQ, follows the NASDAQ 100 index. Additionally, QYLD's covered call options underlying fund. You would have around $765,000 in capital if you invested $2,960 per month in QQQ for the same 8 years as QYLD, or $686,000 after deducting capital gain taxes if you sold the entire investment. The position would produce almost $29,000 more in annual dividends if the money were invested in QYLD by the end of January 2022, as opposed to starting from scratch. Better returns might be obtained by investing in the S&P 500 through the SPY ETF, increasing your total capital to around $581,000 or $530,000 after taxes. Last but not least, if you bought Apple stock, you would have roughly 1.4 million or about 1.2 million after taxes. With today's QILD, this additional capital would yield annual dividends of over $89,000. I believe you get the point I'm making here, and it's a viable strategy that, even if you don't employ dividend-paying stocks to get through, might help you retire sooner with dividends. QILD, in my opinion, is a good product with a use for the market. The fund might be a fantastic source of dependable income if you're already retired. However, I don't believe investing in QILD is the wisest course to pursue, at least not for everyone. If you want to retire in 8 years or even later, you need to feel at ease with your investing plan, as I said at the outset of this video. And if QILD is your preferred approach, go that way, even if it doesn't make the most mathematical sense. Math won't make you have a better night's sleep when the market crashes, and trust me, one day or another, it will. Ultimately, being persistent and patient will help you succeed in obtaining your financial goals. Thank you for watching. I hope you grasped some usable wisdom from this video. If you did, remember to hit the notification button and then subscribe to this channel. That way, you'll be updated anytime we upload life-changing videos like this. Until next time, see ya!